The crypto market hits a 2-year price low. We'll tell you what's driving the price drop and how to prepare for a crypto winter. I'm Brandon Bianco, and this is Crypto Market Today. Consider it your one stop for the latest news related to crypto. Let's jump in. On Monday, the crypto markets took another historic tumble as Bitcoin and Ethereum both saw price drops of more than 20%. And for the first time in nearly 2 years, the total market cap of all cryptocurrencies shrunk below $1 trillion. On Monday, Forbes Online posted an article in which I quote, "Experts say that the crypto collapse is yet another sign of the risk-averse sentiment in markets as investors flee to safer bets amid a backdrop of rising rates and recession fears," unquote. Monday's crash comes days after the announcement that U.S. inflation hit a 4-decade high, up 8.6% from last May. More fear and panic swept through the crypto markets Monday morning when Celsius, a crypto lending app with over $11 billion in assets and 1.7 million customers, announced they would be suspending all withdrawals and restricting user activity on their platform. They posted in a memo to the Celsius community, quote, "Due to the extreme market conditions, today we're announcing that Celsius is pausing all withdrawals, swap, and transfers between accounts. We are working with a singular focus to protect and preserve assets to meet our obligations to customers."
Introducing Unicoin, the world's first equity-backed, dividend-paying cryptocurrency, staking assets in an expanding portfolio of emerging growth, pre-IPO companies, each with a high potential to reach $1 billion valuation. Don't miss your opportunity to be a part of this world-changing event. It could be the opportunity of a lifetime. Unicoin, a new generation cryptocurrency.
As the CEL token price plunged by 70%, speculators were left wondering if it would be the next crypto to go to zero. Following the devastation of the Terra Luna collapse in early May, it may be worth mentioning here that the Terra collapse and the Celsius debacle are not the causes of the bear market, they're symptoms. The markets are more broadly impacted by the macroeconomic factors in play, such as rising inflation, ongoing war in Ukraine, and the supply chain shortages. Number one, high inflation in the US and the EU spark fears of an oncoming or ongoing recession as the Federal Reserve enacts interest rate hikes to slow growth and curb economic demand. The second item, the war in Ukraine, as it dredges on, it exacerbates price hikes on food and energy worldwide. Number three, supply chains are negatively impacted by the ongoing COVID lockdowns in China and war on Ukraine. The recent downturn does not come as a surprise. Some big names in finance have been sounding the alarm for months. Fortune magazine recently published an article that read, quote, "JP Morgan Chase CEO Jamie Dimon first warned about the significantly increased odds of a recession in April, arguing the ongoing war in Ukraine, high inflation, and the Federal Reserve's hawkish monetary policy could combine to create serious economic pain for average Americans." In April, Deutsche Bank predicted that the US is headed for a major recession by 2023. Fortune also wrote, quote, "Two shocks in recent months, the war in Ukraine and the buildup of momentum in elevated US and European inflation have caused us to revise down our forecast for global growth significantly," unquote. A Deutsche Bank team led by economist David Folkerts-Landau wrote, "We are now projecting a recession in the US within the next 2 years." Unquote. The Federal Reserve announced on Wednesday it will hike interest rates by 0.75%, the biggest increase since 1994 as part of its ongoing campaign to fight inflation. At this point, we're left to wonder, are we at the bottom yet? With Bitcoin down 69% and Ethereum down 75%, we're all wondering if we're at the bottom of the bear yet. According to research from Glassnode Insights, published on May 24th, quote, "The Bitcoin market has entered a phase coincident with the deepest and darkest bear cycles of the past. On-chain volume fundamentals have deteriorated, and even long-term holders are now realizing significant losses. Historically, this phase has taken on the order of 8 to 24 months to pass by as the market hammers on a final bottom." Arthur Hayes, crypto enthusiast and co-founder of the 100X Group, said on June 1st, quote, "Politics must align with the macroeconomic environment to produce the catalyst for crypto to exit the current bear market. While the bottom is in, I hope, it doesn't mean prices will automatically resume to a quick ascent towards 70,000 and 5,000 for Bitcoin and Ethereum respectively." While there's no way of knowing for sure if we've reached the bottom of this cycle or not, we can reflect on lessons learned and prepare ourselves for what's ahead. Where do we go from here? Let's start by looking at some of the lessons learned from this current crypto market bear cycle. Firstly, not all stablecoins are created equal. Billions of dollars were lost when UST, the algorithmic stablecoin, lost its peg to the US dollar. DAI and USDC are industry-leading stablecoins worth exploring. Number 2, not your keys, not your crypto. Once you hand over custody of your crypto, whether it's to a lending platform such as Celsius or an exchange like Binance, you're no longer in control of that crypto and you can be locked out from accessing it. And number 3, there are no bailouts in crypto. There is no too big to fail. Crypto can go to zero, although certainly nobody hopes or thinks that will happen. Market experts and crypto businesses alike are preparing for a long crypto winter, in large part due to the troublesome macroeconomics at play. It's time for us to settle in for the long haul. We don't know how long the bear market will last, but we do know that eventually it will end. And with it, new opportunities for generational wealth will emerge. Here are some tips to help you through this crypto winter. First, find a crypto podcast. Some popular ones are Bankless and Up Only, which I'll link in the description below. Secondly, learn crypto by using crypto. Here are 8 crypto projects worth exploring the bear market. Number 3, build your strategy. When the bear market ends, you definitely want to be ready. Number 4, take your mind off it. That's right, get off the computer, unplug and enjoy nature. Enjoy the summer. Prioritize your mental and physical health and get out there and enjoy life for what it's meant to be. That's it for now, folks. Stay safe out there and happy cryptoing. I'm Brandon Bianco, signing off.